Hello, dear students. We are going to continue with section B of ISC 2023 specimen question paper. So we will see question number 11. Question 11. In subparts 1 and 2, choose the correct option, and its subparts 3 to 5 answer the questions as instructed. What will be the operating ratio of Xenia Limited from the particulars given below? So revenue from operation is rupees 9 lakhs. Gross profit is 20% on cost, 20% on cost. Operating expenses is 60,000. So we are supposed to find out what is the operating ratio. So how do we find out operating ratio? They have given us operating gross profit is 20% on cost. So that means if my cost price is rupees 100, gross profit will be rupees 20 because 20% on the cost. So if my cost price is 100, gross profit is 20. So my selling price will be 1. But actual selling price, that means actual sales, is rupees 9 lakhs. So we can find out what is the actual cost price. In other words, what is goods, cost of goods sold. So cost of goods sold. How do we find out? It is 100. It's a cross multiplication. Unitary method, you would have learned it. 100 into 9 divided by 120. So how much is your cost of goods sold? 100 into 9 lakhs divided by 120. You get 7 lakh 50,000 rupees. Now, what is your cost of goods sold? I told you cost is 100, profit is 20, selling price is 120. If your actual sales is 9 lakhs, how much is your actual cost price? How do I find that? It is cost of goods sold is I've calculated, it's 100 into 9 lakhs divided by 120. So it is 7,50,000. So how do I find the profit, gross profit? If you want to find out, it is sales minus the cost of goods sold. Sales minus cost of goods sold will give you the gross profit. Operating expenses is given in the question. It is 60,000. What is operating expenses? It is 60,000. Therefore, operating ratio. How do you find operating ratio? It is cost of goods sold plus the operating expenses whole divided by sales into 100% to convert it into percentage. So it is 7,50,000 plus the operating expenses, which is 60,000 over the sales, which is 9 lakhs into 100%. So when you solve this, what do you get? 7 lakh 50 plus 60, 8 lakh 10 divided by 9 lakhs into 100% will give you 90%. So the answer is B, 90%. So we have answered this question. Answer is 90%. Moving on to the next one. How is interest paid on debentures considered in the cash flow statement? Interest paid on debentures is interest is paid on debentures. Therefore, it is a financing activity because you have taken loan and you're paying interest. So it is something to do with financing. So it is a financing activity. Now they are saying state the objective of calculating liquidity ratio. What is the objective of calculating liquidity ratio? It is to assess the ability of the firm to meet its short-term obligations. So what is the objective of calculating liquidity ratio? It measures the ability of the concern to meet its short-term obligations. So that is one of the objectives of calculating liquidity ratio. Now, the next question is, mention the accounting ratio on which cash flow statement is prepared. Cash flow statement is prepared on cash basis of accounting. Cash basis of accounting. So this is the answer. On what basis? It is on cash basis of accounting. What is gross profit plus cost of raw materials consumed? It is equal to sales or revenue from operations. So objectives of liquidity ratio is to measure the ability of the firm to meet its short-term obligations. And what is the basis of um, calculating basis on which the cash flow statement is prepared? It is cash basis of accounting. And what is gross profit plus cost of materials consumed? It is sales or the revenue from operations. So with this, question 11 is completed. We move on to question number 12. From the following particulars of Bharti Limited, you are required to prepare a common size balance sheet. As at 31st March 2022, these are the items given to you. So shareholders funds, current liabilities, total of equity and liabilities, So remember, shareholders funds plus non-current liabilities plus current liabilities should be equal to your total of equity and liabilities. And they have said non-current assets is 15 lakhs. So first we will prepare the balance sheet and then we will prepare the common size. So first one, we will write the format. So balance sheet, so common size balance sheet of Bharti Limited as at 31/3/2022. Particulars, note number, absolute amount, and balance percentage of balance or percentage of total balance total. Okay. So first one, equity and liabilities under that shareholders funds. Shareholders funds is given in the question. What is shareholders funds? It is 14 lakhs. So I'll write 14 lakhs. 14 lakhs is shareholders funds. Current liabilities, they are saying it is 2 lakhs. And the total of equity and liabilities is 20 lakhs. This is given to you in the question. Remember, non-current liabilities is not given to you. So this becomes the balancing figure, because this plus this should be equal to 20 lakhs. So how much is this? 14 plus 2 is 16. So that means non-current liabilities is 4 lakhs. Remember, once you know the total of your equity and liabilities is 20 lakhs, that means I know what is the total of my asset side. Asset side total is also 20 lakhs. Non-current assets is given to you in the question. It is 15 lakhs. Is your non-current liabilities. That means the balancing figure is your current assets, because the total of your assets is 20 lakhs. 20 minus 15 is 5 lakhs. So 5 lakhs is your current assets. Now, how do we prepare? So we prepare the balance sheet. Now we have to prepare the common size balance sheet. How do you prepare the common size balance sheet? So the total of your liability side, we will take it as 100. That means 20 lakhs, we are making it equal to 100. So 14 lakh will be equal to how much? So how do I calculate this figure? This figure, how do I calculate? It is 14 lakhs. Divide this by 20 lakhs into 100 will give you as a percent. So how did I get this? How did I calculate? It is 14 lakhs over the total balance sheet total into 100% will give you in percentage. We don't write the percent because the heading is already there, percentage, but actually it is 70%. So in the same manner, it is 4 lakhs divided by 20 lakhs into 100. So 20%. So again here it is 2 lakhs over 20 lakhs into 100. So you get it in percentage. So 70 plus 40, 20 plus 10 should add up to 100. In the same manner, I can find out for non-current assets and current assets. So total is 100. So how did I do? It is 15 lakhs divided by 20 lakhs into 100 will give me this. 5 lakhs over 20 lakhs into 100 will give me 25%. So this is the common size. So question number 12 is completed. We move on to question number 13. Question 13. From the following extracts of a company's balance sheets, you are required to calculate cash flow from investing activities and cash flow from financing activities. So this is the current year, this is the current year, and this is the previous year. So last year it was 12 lakhs and now the equity share capital has become 15 lakhs. That means I know there is issue of equity shares. So you have issue of equity shares. You have issued equity shares worth rupees 3 lakhs. Last year debenture was 8 lakhs. This year debentures 10 lakhs. That means again you have issued debentures, issue of debentures. Remember, this issue of share capital is a financing activity. Issue of debentures is a financing activity. Okay, now securities premium reserve is last year 10,000 and now it is 50,000. When you see the difference, it is 40,000. So 40,000 is the premium received, but you have to read the adjustments and see what it is. Okay, so we will wait for a minute. Uh, Plant and machinery 9 lakhs and now it's become 10 lakh 90,000. We need to find out how much is the purchase of plant and machinery and how much is the sale of plant and machinery during the particular period. Accumulated depreciation account is given. Investments 10% investments. Last year 50 and now it is 60. That means we have purchased investments worth rupees 10,000. 10,000 worth of investments have been purchased. So remember, all these items will come under investing activity because these are all assets. Okay, it will come under investing activity. So they say that proposed dividend for the year 2021, last year's proposed is 42,000. This will be paid in the current year. This will be paid in the current year. So this we have to take it into consideration. But this one is proposed dividend of the current accounting period will be a contingent liability. Therefore, this has to be ignored. Additional information. During the year 2021, the company issued 5% debentures at a discount on 1st of April 2021. So we know the debentures were issued on 1st of April and they were issued at a discount of 10%. So you know that 2 lakh worth of debentures have been issued. See, 8 lakhs has become 10 lakhs. So that means 2 lakh worth of debentures you had issued, but you have issued at 5%, 10% discount. So discount is 20,000. So cash coming into the business is 1,80,000. So 1,80,000 is the value of debentures issued. See, please remember, face value is 2 lakhs, but it is issued at 1,80,000. So cash coming in is 1,80,000. Now, the discount on issue of debentures, they are saying that you have adjusted against the securities reserve. So 10,000 is the opening balance. Do you understand? You have adjusted 20,000. After you have adjusted 20,000, your closing balance is 50,000. That means how much is the shares? At what premium did you issue now? So it is 10 minus 20 plus what will give you 50 because closing balance is 50. Or you can open the ledger for securities premium reserve. You will know that the shares have been issued at a premium of 60,000. So issue of shares will be 3 lakh 60,000. 3 lakh is the face value, but you have issued at a premium of 60,000. Now they say provide depreciation on plant and machinery. And they've said sold plant and machinery at the book value of 5 lakhs. So 5 lakh is the book value. You sold it for 4,50,000. That's it. So how do we prepare? How do we solve this particular problem? So first one, we will open plant and machinery account. Asset account we will prepare. We will open plant and machinery account. Plant and machinery account we will open. So first one, remember whenever there is accumulated depreciation account, that means the asset is given at its historical cost. That is gross value. Okay, and assets will always have a debit balance. So see what is your asset opening balance. Opening balance is 9 lakhs. Closing balance is 10 lakh 90,000. So I repeat, asset is asset account will always have a debit balance. Opening balance is 9 lakhs. Opening balance is 9 lakhs and closing balance is 10 lakh 90,000. So that's what I have entered here. Now I am going to read the adjustment. I know that book value of the asset sold. Book value means the historical cost of the asset of the plant that you are selling, plant and machinery that you're selling is 5 lakhs. So remember, because it is the gross value, I'm taking what is the book value, what is given there, 5 lakh rupees worth of asset we are selling. Okay. So what is the balancing figure? The balancing figure is the purchase of fixed asset. What is the value of purchase of fixed asset? 15 lakh 90 minus the opening balance. So 6 lakh 90,000 is the value of plant and machinery purchase. Remember, whenever there is a bank, it will come in your cash flow statement. So this amount 4 lakh 6 lakh 90,000 will come under investing activity. So purchase of plant and machinery during the year will be 6 lakh 90,000. In the same manner, open accumulated depreciation account. Accumulated depreciation will have a credit balance. So what is accumulated depreciation? Opening balance is 4 lakhs. Closing balance is 3 lakhs. Opening balance is 4 lakhs. Closing balance is 3 lakhs. This is your accumulated depreciation account, 4 lakhs and 3 lakhs. Now, in the question, it is very clearly said depreciation provided for the year is 1 lakh. So 1 lakh worth of depreciation you have charged in this particular year. So your depreciation provision account will go up by 1 lakh. So you say by statement of profit and loss, this is depreciation for the year, 1 lakh rupees. So this side total is 5 lakhs. So remember, closing balance should have been 5 lakhs if there was no sale of asset. But the closing balance has been reduced to 3 lakhs. That means 2 lakh rupees is the value of depreciation on the asset sold. You have sold one plant and machinery, the accumulated depreciation on that particular asset is 2 lakhs. So 2 lakhs is the depreciation on the asset sold. So we will write here to plant sold account 2 lakhs. So since you have written here plant sold and plant sold, you will open plant sold account. Here it is by plant sold account. So here it will be to plant and machinery. The value of the asset sold is 5 lakhs. And here you have written to plant sold account. So here it will be by accumulated depreciation 2 lakhs. So what does this mean? You have sold one of the plants. Okay, and the historical cost of the plant is 5 lakhs. Accumulated depreciation on that plant is 2 lakhs. So 5 lakh minus 2 lakh is 3 lakhs. So 3 lakhs worth of plant you are selling it for. Selling it for what price? You're selling it for 4 lakh 50,000. So this is money coming in. Whenever it is bank, that means this will come in your cash flow statement. Wherever there is bank, it will come in your cash flow statement. So 4 lakh 50,000 is a worth of plant that you have sold. For 4 lakh 50,000 is the realized value. So 5 lakh minus 2 lakh is 3 lakh. 3 lakh worth of plant you sold it for 1 lakh 50,000. Therefore, profit on Sale of plant is 1,50,000. So this is profit on sale. Profit on sale. Sale of plant. So plant account is completed. Now we can prepare the we can calculate what is cash flow from investing activities, financing activities. Remember, when you're preparing cash flow statement, first is operating activities, then the investing activities, and then the financing activities. Operating activities, they have not asked you to calculate. Therefore, we are not going to calculate that. We are going to calculate what is cash flow from investing activities. So investing activity, sale of plant. We have sold plant for what price? We sold plant for 4,50,000. See here, by bank. By bank means money coming in. Therefore, what's coming in should be positive. What's going out should be negative. So if you have two bank, it will be a negative figure. If it is by bank, it is a positive figure. So it's by bank. That means money coming in 4,50,000. 4,50,000 money coming in. Sale of plant and machinery. Sorry, purchase of plant and machinery. So purchase of plant and machinery means money is going out. So what is the purchase of plant and machinery? It is 6,90,000. So 6,90,000 will be negative. We have not opened investments account because there are no adjustments. Straight away you can see here. Investments last year it was 50, now it is 60. That means you purchase investments worth rupees 10,000. So whenever you purchase, money is going out, therefore it is negative. Okay, and they have not given you the date on which the investments have been purchased. I am assuming that the investments have been purchased at the beginning of the year. That is as on 1st of April 2021. So if it is in purchased on 1st of April, that means you have to receive interest at the rate of 10% on 60,000 because the investments have been made at the beginning of the year. So on the entire 60,000, 10% you have to receive interest on investments. So interest on investments, you are receiving 6,000 rupees. That is 10% of 60,000. And you have also purchased goodwill. Last year it is 70, now it is 1 lakh. Remember, when there is increase in goodwill, it is assumed as purchases and unless they say otherwise. Uh, if there is a decrease in goodwill, we all normally take it as goodwill written off. So here it is an increase, therefore we will take it as purchase. 30,000 worth of goodwill purchase, therefore negative 30,000. Therefore, what is your investment cash flow from investing activities? Cash flow from investing activities is um, uh, uh, 2,74,000. Because it is negative, we say cash and cash equivalents used in investing activities 2,74,000. Okay, moving on to cash flow from financing activities. So we know shares have been issued at rupees 3 lakhs, and you know the shares have been issued at a premium. How do you know it is issued at a premium? Because securities premium reserve has gone up. Yeah. If you want, we can also open securities premium reserve account. I'll open it here. Securities premium reserve account. Securities premium reserve account. By balance brought down. What is your opening balance? Opening balance is 10,000. 10,000 is your opening balance. And what is your closing balance? Closing balance is 50,000. They have said very clearly that discount on issue of debentures have been written off. So two, discount on issue of debentures is issue of discount on issue of debentures is 20,000. Therefore, at what price did you issue the shares? So you have issued shares at a premium. How much is the premium? The balancing figure, which is 60,000. So this is premium on issue of shares. So the total amount that you have received will be face value of the shares is 3 lakhs. 60,000 is the securities premium reserve, which is 3,60,000 because this is a receipt. So money coming in. You have issued debentures at a discount. You know that debentures you have issued is 2 lakh and discount allowed is 20,000. Therefore, the money coming in is 80,000. And remember, they have told you that debentures were issued on 1st of April. That means you have to pay debenture interest on 10 lakhs. So debenture interest, how do you calculate? It is 10 lakhs into what percent? 5%. So 5% of 10 lakhs. No, 5% of 10 lakh. Debentures carry 5%. So 5% of 10 lakhs is 5,000. How much is it? 10 lakhs into 5% is 50,000. You're paying a debenture interest and dividend paid is given to you. Please remember, this is the last year's dividend that you're paying now is minus 42,000. So this is your financing activities total is 4,48,000. So 4,48,000 4,48,000 and here investing activities 2,74,000. So with this question number 13, first part is over. Now we can do the second part. The second part. Again, you are required to prepare cash flow statement of Bruno Limited as for the year 21-22 from the following balance sheet. So this is the balance sheet, 2 years balance sheet is given to you. So if you see 3,50,000 is the last year's share capital and now it is 5 lakhs. That means 1.5 lakhs you have issued equity shares. Last year profit was balance in reserves and surplus, that is statement of profit and loss was 88. But now it is 1,20,000 means you made a profit of 32,000. 32,000 profit you have made. 32,000 is the profit. Last year, 2,10,000 was your debentures, but now it is 1,50,000. That means 60,000 worth of debentures have been redeemed. And remember, it carries 7% interest. Next one, short-term borrowings. Last year, 46, and now it is 39. That means 7,000 were returned. You have repaid the loan. 46,000 was bank overdraft, but now the liability has reduced. That means you have paid 7,000. Now, provision for tax, you have to open provision for tax account and find out how much is the tax provided for the particular year. So this we have to open the ledger to find out what is it. Now, property, plant and equipment, and they say it is plant and machinery. Opening balance was 3,30,000. Now it is 3,80,000. So we have to see the adjustments and find out whether there is what is the purchase and sale and all. Contingent liability, last year there was nothing. This year it is 30,000. Remember, this year's you will not take it into consideration, but last year's if they had given you, that will be assumed to be paid in this current year. But it is 0 here. That means nothing. Proposed dividend, there's no adjustment. During the year 2021, plant and machinery 1,20,000 was purchased and some machinery was sold. Some machinery was sold. What is the value of machinery sold? We don't know, but it is sold at a loss of 12,000. Sale value of the machinery, we don't know. That means we have to open plant and machinery account and find out at what value we have sold this plant and machinery. The company charged 38,000 as depreciation on plant and machinery. Interest of rupees 18,000 was paid on all borrowings. So debentures and all, we have paid 18,000. Tax paid is 25,000. Okay, this is what is given to you. So we will open the ledger accounts first. We will open, first one, we'll open provision for tax account. So how much is the opening provision? Opening provision is 30,000, closing provision is 40,000. So I'll write provision for tax is a liability. So it will have a credit balance. So credit balance is 30,000. 30,000 is your um, provision for tax opening balance. Closing balance is 40,000. Right? In the question, it is clearly given how much is the tax paid? How much tax did you pay during the particular year? 25,000. And when you pay tax, money is going out. Therefore, it is to bank 25,000. So this is tax paid. So you will know how much is the depreciation for the year. Sorry, provision for tax for the year. The balancing figure is the provision for tax for the year. How much is the provision? 35,000. So 35,000 is the provision for the year. This will come in the working note to calculate what is the profit for the period. So remember, this is 35,000 will come in your working note, and this tax paid will come in your operating activity because it's to bank. You will say income tax paid 25,000. Okay, so you know where to take this and where to take this. Now open plant and machinery account. Plant and machinery is an asset. Asset will have a debit balance. Opening balance is 3,30,000. What's your closing balance? It is 3,80,000. Opening balance 3,30,000, closing balance 3,80,000. You know what is the depreciation for the year? What is the depreciation for the year? Depreciation for the year is 38,000. 38,000 is the depreciation on plant and machinery. It's given in the question. Depreciation 38,000. They have also said that your purchase plant and machinery for 1,20,000. So to bank 1,20,000. This is the purchase of plant and machinery. You know that you have sold a piece of plant and machinery at a loss of 12,000. Therefore, loss we have to credit it. So 12,000 rupees is the loss on um, plant and machinery. So the balancing figure will be the sale value. So this is the balancing figure. So at what value did you sell the plant and machinery? It is 20,000. 20,000 is the sale of plant and machinery. So this is by bank. That means money is coming in. So this will come under investing activity as an inflow. And this will come under investing activity as an outflow. This depreciation will be taken as non-cash item under operating activity. And this loss on sale of plant also we have to take it in under operating activity because this is non-operating loss. Okay, so this is the ledger that we need to open. We have finished opening the ledger, so we can start the cash flow from operating activity. First, we will open the we'll do the working note. Profit as per profit and loss. We know what is a profit as per profit and loss account because under reserves and surplus, we have seen here 88,000 was the opening balance, closing balance 1,20,000. That means 32,000 is the profit. So 32,000 is the profit. You know that provision for tax we have to add back. So how much is the provision for tax? We know it is 35,000. See in the provision for tax account. Provision for tax for the current year is 35,000. So add back 35. So what is the total? Total is 7,000. So in your cash flow from operating activities, the first step, profit for the year is 67,000. So this is the working note. So from the working note, that 67,000 comes. Then adjustments for non-cash and non-operating items. Depreciation for the year. How much is the depreciation for the year? You have charged depreciation 38,000. So 38,000 you need to add back. Loss on sale of machinery, that loss you have to add back because this is non-operating item. It's not operating loss. Then interest on all borrowings. How much is the interest on all borrowing? It is given in the question. Interest paid on all borrowings. All borrowings, it is 18,000. So 18,000 you have to add back because this is interest paid on all borrowing. This is a financing activity, not an operating activity. So it's non-operating. Therefore, you are adding back. So when you do this, you add it up, you get the operating profit before changes in working capital. Remember, in this sum, you don't have any changes in working capital. Current assets and current liabilities, you don't have any changes because short-term provision, though it is a current liability, this will be, you have opened a ledger account, therefore it should not come in under this. Borrowings, you will take it as financing activity. And current assets, cash and bank balance, this will come in a reconciliation part. Therefore, there is no changes in working capital. Therefore, the total is this plus this is the total. Now, from here, what we have to do? What we have to do? We have to minus the tax paid. How much tax is paid? We know tax paid is 25,000. So this is the total money that is generated from the operating activities. But out of this, you are paid tax to the government 25,000. So the net cash flow from operating activities is 1,10,000. So moving on to the investing activity, sale of plant and machinery and purchase of plant and machinery. Purchase of plant and machinery, money is going out. Therefore, you have to take it as minus. So go to your ledger. Purchase is 1,20,000. So negative 1,20,000. You can put 1,20,000 within brackets. Then you have sold plant and machinery. When you're selling plant and machinery, money is coming in. Therefore, it is positive. So these two totals, you have to take it in the outer column. Please remember, it is the net cash used in investing activity since it is negative. Moving on to cash flow from financing activities, bank overdraft paid. You know, bank overdraft, you have paid 7,000. See here, last year 46, now it is 39. That means 7,000 you have paid. So minus 7,000. Debentures you have redeemed. How much is the debentures that you have redeemed? 60,000. They have not said it is redeemed at a premium or anything. Therefore, 60,000 is debentures redeemed. Now, interest on all borrowings. How much interest have you paid? You have paid 18,000 debenture interest on all the borrowings put together. And what is the value of issue of shares? Issue of shares is 1,50,000. So 1,50,000 money is coming in, therefore it is positive. So here you will add these four and take it in the outer column. So operating activity total plus investing activities plus financing activities, when you add it up, you will get net cash and cash equivalents, net increase or decrease in cash and cash equivalents during the year, which is 75,000. I told you that the bank balance, this will be taken for a reconciliation. So once you are adding all the three, you get 75,000. To this, if you add the opening cash and cash equivalents, you must get the closing cash and cash equivalents. It must tally. When you add these two, you should get the closing cash and cash equivalents, 4,69,000. You must get 4,69,000. This is how you check whether it is right or wrong. So This is the net increase or decrease in cash and cash equivalents. At the opening cash and cash equivalents, you get the closing cash and cash equivalents. So question number 13 is completed. We move on to the last question of this question paper, specimen question paper. So moving on to the last problem. Moving on to the last problem. From the following statement of profit and loss of Swatantara Limited for the year 2021, calculate any three ratios. So we have to calculate any three ratios: gross profit ratio, net profit ratio, operating profit ratio, and inventory turnover ratio. So what is gross profit ratio? Gross profit ratio formula is gross profit over net sales or revenue from operation into 100%. So gross profit over net revenue from operations multiplied by 100% will give you gross profit ratio. So you know revenue from operation is 5 lakhs and you have to find out gross profit. So you have to minus all purchases, find out what is cost of goods sold, purchases plus opening stock minus closing stock plus the direct expenses. These are all the direct expenses. So we have to take this and find out what is cost of goods sold. Sales minus cost of goods sold will give me the profit. So take down the sales is actually how much is sales? Sales is given to me 5 lakhs. Sales is 5 lakhs. Cost of goods sold. How do I find cost of goods sold? Cost of goods sold will be opening stock plus purchases plus wages plus carriage inwards minus closing stock will give you cost of goods sold. So how do I calculate here? Opening stock 40,000 plus purchases 2 lakh 50 plus wages 16,000 plus carriage inwards 88,000 minus the closing stock, which is 50,000. So it is 2,64,000 is cost of goods sold. So how much is the profit? Profit is gross profit is sales minus cost of goods sold. So gross profit is equal to sales minus cost of goods sold. So your gross profit is 2,36,000. How do you calculate gross profit ratio? Gross profit ratio is equal to gross profit over net sales into 100%. So what is your gross profit? It is 2,36,000 divided by your net sales, which is 5 lakhs into 100 will give you in percentage. So 47.2% is your gross profit ratio. So we have to find out what is net profit ratio. Net profit is given to you. What is your net profit? Net profit is 1,26,000. So net profit ratio is net profit divided by net sales into 100%. So what do we get? Net profit is given to you 1,26,000 divided by the net sales into 100%. It is 25.2%. Now they are asking you what is operating profit ratio. So operating profit you have to find first. What is operating profit? It is net profit, okay, plus non-operating loss plus non-operating loss minus non-operating profits um, plus finance cost. So what is your net profit? Net profit is 1,26,000. Non-operating loss is your loss that is charged. Here, for example, loss on sale of furniture is non-operating loss. It is not from the sale of goods. It is the sale of asset. Therefore, this profit you have to add back. This loss you have to add back. And if there is any profit which is credited to profit and loss account, we have to deduct it. They say other income. This is profit on sale of machinery. It's an asset that you have sold. So this profit has to be deducted, which is 40,000. And then add the finance cost, because finance cost is this finance cost is a financing activity, not an operating activity. Therefore, you have to add back the 30,000. So you will get what is operating profit. So operating profit is 1,26,000 plus 12,000 minus 40,000 plus 30,000. So 1,28,000. So operating profit ratio will be operating profit divided by operating profits divided by net sales into 100% will give you operating profit ratio. So operating profits divided by the net sales into 100 will give you operating profit ratio. Okay, next one, the last one, inventory turnover ratio. What is inventory turnover ratio? Cost of goods sold divided by average inventory. So cost of goods sold, we already got it here. Cost of goods sold. Cost of goods sold is 2,64,000. We have already calculated. What is average inventory? Average inventory is opening inventory plus closing inventory whole divided by 2. Opening inventory plus closing inventory whole divided by 2. So opening is 40,000. Closing is 50,000. Whole divided by 2 will give you 45,000 is the average inventory. So it is inventory turnover ratio will be cost of goods sold, which is 2,64,000. 2,64,000 2,64,000 divided by average inventory, which is 45,000, will give you will give you. So how many times you have to find out? It is 2,64,000 divided by the average inventory. So it is 5.87 times. I hope this video will be of help to you. Thank you very much. Bye-bye.